I'm Charlotte McLeod with investingnews.com, and here today with me is David Erfle, editor and founder at Junior Miner Junky. Thank you so much for being here. Great to have you.
Oh, thanks a lot for having me on again, Charlotte. Always nice to talk to you.
Really good to be catching up with you. I couldn't believe it's been since the beginning of the year was our last conversation. So a lot to catch up with when it comes to gold and the other metals. I thought, just to set the stage, if you could pull out any key highlights or takeaways that you have on gold in the first half of the year.
Well, yeah, the first half, we had a 27% rise in the gold price in 2024. And then in 4 months, we had another 30% gain. It was a perfect storm for the precious metals, and especially the gold price. Geopolitical tensions, the debt situation, the Trump tariff situation, the Fed being stuck in between a rock and a hard place as far as raising interest rates further or beginning to lower them. And he's got Trump on his case threatening to fire him. The gold price was just, it's a perfect storm. And now we've got an eye in that perfect storm. We've got a leveling off here because, let's face it, the gold price got way ahead of itself. It ran up to $3,500. And at one point I think it was 115 trading sessions above its 50-day moving average until last week. And that I hadn't seen that, I think, in like 10, 15 years. So this is a healthy consolidation of the recent gains. We've had a ceasefire in, the reasons for it coming off are good, which is, the ceasefire between Israel and Iran. But it's just a ceasefire, their oil fields weren't hit, even though they've discussed shutting the Strait of Hormuz. They haven't done that yet. That's where, 1/5 of the world's oil goes through there. They haven't done that yet. So the gold price is coming off. So this is a good reason for the gold price coming off. We don't want to see a situation like what we saw in the late 1970s. Speaking of the late 1970s, we've got a stagflationary situation here now that the Fed has admitted that we're in, but also we also had the geopolitical situation with Iran hostage crisis and Russia going into Afghanistan. That was what took the gold price. The stagflation situation took the gold price from $35 to $400, and then Russia rolling into Afghanistan took the gold price from $400 to $850 in just 6 weeks. So, we don't want to see the gold price going up like that on the possibility of a World War III situation. So now, we've got the gold price coming off because it looks like, we're backing away from World War III fears, which is a good thing. But it's the debt situation and the stagflationary situation that's still keeping the gold price well bid above $3,000.
Okay, I think that gives us a really good base to work off here. And you hit on a point that I wanted to bring up because we had quite an interesting week or couple of weeks with the tensions in the Middle East coming to a little bit of a head, then pulling back. We've got also last week trade and tariff news between the US and China. And I was going to ask, for you, there's so many of these underlying drivers that are important for gold. Is that more noise? But it actually does sound like these are important things that investors need to pay attention to and take into consideration.
Oh, absolutely. The biggest reason the gold price has been doing what it's doing is central banks continuing to buy gold. Let's face it, the U.S. bonds are no longer a safe haven. Gold is now the lone safe haven of choice. And not only are central banks buying gold, but many of them are selling their dollars to buy that gold. So that's a dual wind at gold's back, along with the geopolitical situations getting remaining really bad in the Russia-Ukraine situation, in the South China Sea with the Taiwan China situation, and even Thailand and Cambodia are fighting again. So all these geopolitical situations happening around the globe, it's keeping the gold price well bid. And I saw a story this morning where North American investors are taking some profit in their gold. They're selling their gold coins, but in Asia, where there's 3 billion people that view gold as money and have done so for thousands of years, they're buying this weakness. So, the gold price continues to have all these separate wins at its back, and there's so many potential black swan situations out there that investors are concerned about. But the interesting thing is, it doesn't seem to concern them as far as the stock market is concerned. I mean, the stock market is back at all-time highs. World stock markets are at all-time highs. So, there's this risk in the Middle East that still hangs over our heads that really isn't priced into the gold market anymore. There's that situation that could take the gold price much higher if we see flare-ups again, which I don't want to see that, but it is a real thing that we have to be concerned about.
All of these issues that you mentioned are not translating into effects in the stock market. Is that something that you see eventually having an effect there, or how do you think that plays out? When will people maybe finally take notice?
Yeah, well, I do. I mean, before we had the Liberation Day, tariff situation, mini panic in the stock market, we started to see some sector rotation into gold and the gold stocks. But now we've seen short covering come in and take the stock market back up to all-time highs again, because when we had the U.S. Go ahead and use their bunker busters to attack Iran's nuclear facilities, they did it on a Friday night, Saturday morning situation where the stock market had time to calm down, because they went in and went out and announced that they announced a mission accomplished situation, and the stock market began to view Iran as a paper tiger, and that situation diffused. So risk on came back into the marketplace and took the stock market up to all-time highs, and it brought off the war premium in the gold price, which, like I said earlier, is a good thing. But still, the gold price, it just managed to lose support at 3,300 last week. It's back testing it right now as we're speaking, and today is the last day of the quarter, so there's a lot of quarter end book scoring going on as well here. But I wouldn't be surprised to see it, at the very least, the $3,200 level tested, because that's where the 18-week moving average is. And like I said, recently we had gold finally lose its 50-day moving average support. So that's the first time, like I said, that's taken place in quite a while. So this is more healthy profit taking. So I wouldn't be surprised to see that $3,200 level tested. I wouldn't even be surprised to see 2,950, 3,000 tested, which would also be a good thing, because the gold, like I said, the gold price has gotten ahead of itself, and you don't want to see a parabolic situation in the gold price. So through the summer here, which is typically, we typically have a summer lull in this sector. So that would be a good thing if that 2,950, 3,000 level was tested. But that would be thrown out if the geopolitical situation heats up again in the Middle East. If the U.S. gets drawn in more, and Trump's been threatening to drop more bombs, and there's still fighting going on over there, even though there's a ceasefire, and the situation in Gaza is not gotten any better either. So there's all that hanging over the gold price here. So you're seeing this action in gold stocks. You're seeing the weakness being bought. Like I said, you saw the gold price lose that 50-day moving average support, but the GDX and GDXJ have remained above their 50-day moving average. So now you're starting to see gold stocks show relative strength against the gold price, and we haven't seen that in quite a while.
One more point just before we go over to the gold stocks on gold that I wanted to ask you about. So you were mentioning the debt situation. I think at the beginning of the year when we're talking about gold price drivers, you mentioned that was the main thing to keep an eye on there, this untenable debt situation and
Absolutely.
the bond market taking note of that. And definitely that's something that we've seen play out this year. So any other points that you would note on that that you think people should be aware of?
Oh, sure. I mean, just over the weekend, Senate Republicans, they pushed, Trump's big, beautiful bill forward. And, the Congressional Budget Office said that it's going to add another 3.3 trillion to the national debt over the next decade. And what they've pushed through is 800 billion more than what the House approved a few weeks ago. So, this has put the Fed, in this situation where basically they're, like I said earlier, they're between a rock and a hard place here. Because if they continue to raise rates, that they're terrified of tanking the bond market. And if they start lowering rates too soon, that will tank the dollar. So they're stuck in this limbo where they're not doing anything right now and hoping for the best. But at the same time, you've got Fed heads coming out like John Williams saying that this tariff situation is slowing growth and slowing labor growth. Look, we had just last week we had the U.S. government come out and say that we've had there's a deficit in Q1. So, and then at the same time, later in the week, you had PCE inflation rising further above the Fed's fantasy 2% target. They've got this fantasy 2% target that they think they're going to get to, and the figures just keep saying that it's not going to happen because it's moving farther away higher. So the very definition of stagflation is slow economic growth, slow labor growth, combined with higher inflation, and that's exactly what we have right now.
And you would think that in the West, this would be waking people up to the appeal of gold. But when we talked last, this was one of the missing ingredients that you had mentioned,
Yep.
the Western investors. So
Mhm.
how are they standing at this moment? Are people starting to take a better look at gold?
Well, they did when we had that mini panic in the stock market, right? But now that the stock market has gone right back up to all-time highs, and by the way, the CAPE ratio is getting closer now to the all-time bubble highs of the dot-com bubble highs of 2001. This ridiculously overvalued is the stock market, but they still keep buying. So, they're preoccupied again with overvalued AI stocks and crypto. So until the stock market rolls over again, and leading economic indicators are saying that we're headed into recession if we're not already there. Like I said, we were already seeing negative growth in Q1, and we've got higher inflation. And like I said, if the Strait of Hormuz is shut down, the oil price is going over $100 a barrel almost overnight. So we've got that situation hanging over us, but investors still don't seem to care. They're still bidding up high price stocks. So once they start to roll over again, that's when you're going to see more Western interest in gold stocks and in the gold market.
Yeah, I see what you're saying there for sure. And so looking at the gold stocks now, where are you seeing the most opportunity at this time? I know you're not focused on the early juniors, but what are you seeing right now?
Yeah, my portfolio that I share with my subscribers has done very, very well because I've been focused on late stage juniors, de-risking high margin projects. And we've seen late stage juniors outperform not only the gold price, but they're outperforming the miners now, and they're definitely outperforming the stock market. So that's been the sweet spot. But the value now is down in the earlier stage juniors, like mineral resource estimate to PEA stage juniors. I'm still not messing with drill plays because there's really no need to take that risk because there's still a lot of value out there in these juniors that have already discovered a lot of ounces and they're just de-risking them.
think that's really helpful. And you had mentioned at the start of the year you had a pretty big cash position. So I'm curious on how that's ended up playing out for you this year. Do you still have a lot of cash on hand?
Oh no, I deployed all that cash at the end of the year last year, because last year was a fantastic opportunity to basically, complete your positions that you've been accumulating. Because at the end of the year, remember, once Donald Trump was announced as the victor, that's when the gold price started to consolidate and the stock market really started to move up. So investors were like, okay, gold price is correcting here and the stock market's going back up. So why do we own gold stocks here? So by the end of the year, the gold price was up 27%, yet the GDX and the GDXJ were only up 13%. And that was screaming buying opportunity. So I completed positions, and my portfolio this year, like I said, that I share with my subscribers, it's up 80%. And that's not only outperforming the stock market by a wide margin, but it's also outperforming the mining sector in the GDX and GDXJ by a wide margin as well.
Well, that's really good to hear. And another topic I wanted to go over is M&A activity in the gold space. So we've seen, I think, quite a number of deals so far this year. If we're looking back at the first 6 months, we have previously talked about the issue of take unders versus takeovers in the gold space. So how are you feeling about this?
Oh yeah, we're seeing takeovers now. We're seeing takeovers for nice premiums now. Sure, we're seeing a take under here every once in a while. Reign of Silver was just taken under by Torex. That disappointed a lot of investors, and that's an early stage drill play. So yeah, but in the silver space is where it's really exciting, right? I mean, it started last year with First Majestic taking over Gatos. And that's a single asset producer. And then that was followed by Coeur d'Alene taking over Silvercrest. That's a single asset, because in the mining space, single assets, primary silver projects are very rare. High margin primary silver projects are rare. And these major mining companies and management teams, they understand how they see that the silver price has been so undervalued to the gold price. They know that in the later stages of bull markets, in the precious metals bull market, the gold bull markets, silver catches up. And when it catches up, it does so pretty quickly. And then you have silver outperforming gold. So what they're doing is they're getting their ducks in a row. They're adding to their growth by taking over these single asset juniors to add to their growth before the silver price broke out. And lo and behold, before they, right after they did that, they started these, taking over these companies. The silver price broke out above $35 and had a weekly close above 35. That signified a major breakout above 13-year resistance. And then last week, we had silver come back and test that resistance and go back up. So now it's consolidating those gains as well. So there's not very many primary silver, large primary silver assets out there controlled by juniors that are desirable. So the ones that they're really outperforming. And unfortunately, I accumulated shares in those companies for myself and my subscribers. So they're doing very well right now. And I think there's a couple of them that might even be in play to be taken over, because investors see this. They see that what these majors need to do is to add more ounces now in gold and in silver, because they've done the right things. They've shored up their balance sheets. They're paying dividends. They've paid down their debt. They're buying back shares. And now their investors are clamoring for more growth. So this is going to, I'm surprised it hasn't really started up yet again, but I expect it to start up again pretty soon, to where another M&A wave is going to come upon us here. And now I'm not fearful of it. Before I was fearful of an M&A wave coming into the sector too soon, because my subscribers and I, we've spent so much time and effort and patience and energy accumulating these stocks, we don't want them taken over too soon, right? We want them to move on their own for a while first, get up 2 or 3 times, and then have that premium slapped on them when a major wants to take them over. And that has taken place now. So I don't mind if a couple of our stocks get taken over here in this environment.
Okay, well, that will be something to watch moving forward. And I think this gives us a good transition. Maybe we talk a little bit more about what's going on with the silver price. So I know you've mentioned that $35 per ounce level as pretty key for silver, which you mentioned, of course, we've gotten past right now. But people are feeling, I think, a little bit nervous about silver just because it's known for being so volatile. So what do you see as silver's path forward for the rest of the year?
Well, it's interesting. Although the silver price has risen significantly in recent weeks, it's quietly staging, one of these really powerful breakout in the commodity space. I mean, 13-year resistance is pretty major, breaking above 13-year resistance. And before the quarter ends today, I was hoping that we see a quarterly close above 37.50. Because that would be an all-time high quarterly close. Then you'd really get momentum players in this sector. And the silver space is so tiny. It doesn't take much big money to come in and really start moving it. But on the other hand, there's really no euphoric exuberance, in this sector. If you look at silver sentiment, it's still pretty low. But as far as the silver coins are concerned, as opposed to gold coins, they're more attractive to retail investors because they can buy them, right? I mean, to buy a gold coin now, it's going to cost you, $3,500 to buy a gold coin, but silver coins are for the retail investors. So, and they understand that when the precious metals bull runs, silver runs right along with it, and the gains are much higher toward the end. So, but now, as opposed to the previous bull market, in the last bull market in gold and silver, it was about a 50-50 ratio between retail demand and industrial demand. But now it's about 40-60, right? Because the AI applications and the solar applications. So now silver is more of an industrial metal. So that's another reason why it's been lagging the gold price. But now, like I said, if it holds this $35 level, I mean, we've got a bull flag going on here at 35 over the past few weeks. And once it gets over 37, it could run to 40 pretty quickly. And the silver miners are telling us that, because if you take a look at the silver ETFs, SIL and SILJ, they've been leading higher. In other words, they've been showing relative strength to not only the silver price but to the gold stocks. See, in the past, when we had the gold price bumping up against 2,000 for 4 years and not being able to get above it, both silver and the mining stocks were lagging because central banks were buying gold. They were buying silver and gold stocks. So they were lagging, and they represent more of the speculative part of the precious metals market, right? When speculation really starts to come in, they get into silver, they get into juniors, they get into gold stocks. So now we're starting to see that. And whenever there's weakness, it's being bought pretty quickly in these stocks. And if you take a look at the TSX Venture, that's really interesting, because the TSX Venture has been so down. It's been kicked down for so long and been ignored. It's still 75% lower than it was when we had that spurt, that COVID spurt. When we had that false move, when we had that panic move down, and then we had that whipsaw move up, that slingshot move higher. It saw the TSX Venture go up so far so fast. But now it's created this really strong 3-year base, and it's breaking out of that base, and it's doing it on rising volume. So you're seeing more speculation coming into this space. I mean, let's face it, it had a lot of competition before, especially with crypto. Crypto and AI were just kept everybody on the sidelines as far as the venture is concerned. And I think it's a little over 50% junior miners. It's not even all junior miners, so it's not a true barometer, but it's a pretty good one.
That's really interesting to go into. Thanks for highlighting that. In addition to gold and silver, I also wanted to bring up copper. So this is a metal that we've talked a little bit about before. It's one that I'm less familiar with, but I know over the past week or so, we've seen some interesting price activity and developments there. So I'm hoping that you can help me unpack and understand what's happening with copper right now.
Yeah, well, it's kind of what was happening with gold. I mean, the warehouses in London and Shanghai, they're emptying, and it's increasing the risk of a copper squeeze. So copper for delivery last Thursday, it rose more than 3% to a high. It got to like $5.16 a pound. And that's because of what's going on with it's pulling in buyers ahead of likely tariffs. So it's the tariff situation that's really affecting the copper price as well. It's interesting because on the one hand, you've got the market, you've got all these indicators in the market saying we're heading into recession if we're not already there right now, which you would think would be a headwind for the copper price. But at the same time, you've got this tariff situation that is giving a strong wind at the back of the copper price. So, I mean, if $5 becomes a floor as opposed to a long-term ceiling, that's when these copper stocks will really start moving.
Right. I think that when it comes to copper stocks, that's a question that people have. They know that we need copper for the long term and the long term outlook is good, but then they look in the short term and they wonder about the US economy, even the global economy and what's going to happen there. And they wonder, okay, is this really the time for copper stocks? So it sounds like maybe not. Any further thoughts there?
No, I think it is okay. I've got a couple in my portfolio. And I share my retirement account with my subscribers as well. And I recently put a copper stock in the Copper Junior in there, and it's doing really well. So I think this is a good time to start looking at copper focused juniors. And I've got another one on my watch list that I'm hoping to get into pretty soon here with profits that I'm about to take on a couple of companies that are close to going up 3 times my purchase price.
Okay, so it can be the time for copper. That is good to know. Any other areas that you're focused on right now? I think those are the main ones that we usually cover, the gold, silver, copper, but are you heading out into any other different directions at this time?
Well, in my retirement account, I added some oil exposure several weeks ago before the attack. I mean, I used to take a look at the oil gold ratio. It's really out of whack. Like the gold silver ratio got out of whack, screaming, buy oil, when it was screaming buy silver also. Gold silver ratio got up to 107. And I was screaming, okay, it's time to buy silver. Look at, I mean, this rarely happens. The last time the gold silver ratio got over 100 was the COVID panic. It hit 124. And then, a few months later, it was 3 times higher. So, oil is something else to start looking at as well. I don't do that on my newsletter. I just focus on gold, silver, and copper. And those are all doing really well right now. And I expect them to continue doing well into the immediate future. I mean, we're just getting started here in this precious metals miner bull market here. Because smart money has started to get in, but a good barometer to look at as far as gold stocks are concerned is the price of Newmont, right? I mean, Newmont is the largest, most liquid gold stock out there, and it's the only gold stock on the S&P 500. So if you take a look at the recent action, it has been starting to bifurcate higher. It's trading at 52-week highs while the sector is in correction here, and it's doing so on rising volume. So that's telling you that retail, your generalist investors, they're finally starting to nibble and getting into the gold sector. If you take a look at their cash flow in Q1, they reported 1.2 billion in free cash flow, and they're going to be announcing their Q2 quarterly results at July 24th. As Newmont generally kicks off earnings season, and with the gold price averaging another $300 higher in Q2, I wouldn't be surprised if they report at least 1.5 billion in free cash flow. I mean, that's a run rate of $6 billion in a year. So, and the stock is still incredibly undervalued and ignored. So keep taking a look at the Newmont stock chart, because that's the leader, that's the big boy, and it had been on the ropes for so long. They were digesting that Newcrest merger. They were underperforming the market. It's hence keeping your retail investors out of this sector. But now it's, like I said, it's starting to show relative strength. If you take a look at the monthly chart, it's got this 3-year beautiful inverse head and shoulders bottom on it, and it's just breaking above the neckline of that head and shoulders. So this is something to watch if you're concerned about the health of the gold stock market during a gold price correction.
All right, watching Newmont on July 24th. We'll keep an eye on that. And I think that's a good place to wrap up, unless you had any final thoughts or you want to let people know where they can find you online.
I think I've babbled on long enough here. But yeah, you could find me at Kitco. I generally put out an article every week. During the summer, I back off quite a bit. So I might not put out another issue for another few more weeks, but I put one out last week. So that comes out on Fridays. And then my website is juniorminerjunky.com. You could find me there.
Well, perfect. Thank you so much for coming on to talk about gold and some of the other metals as well. This was great.
Always a pleasure, Charlotte. Thanks a lot.
Once again, I'm Charlotte McLeod with investingnews.com, and this is David Erfle with Junior Miner Junky.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.